really the point to consider is not where absolute growth is, whether it be GDP, earnings growth, inflation. I mean, earnings season has been fantastic. The real question is the second derivative. I mean, look, we're 4% off all-time highs with the Delta variant. And keep in mind that Pfizer and Moderna are saying that the vaccine is effective on these variants. But our expectations for the general economic landscape remain pretty positive over the next year. But I think it's time to have investors start thinking about where the puck is headed next. I mean, the S&P 500 earnings should reach about $200 a share this year. That is a massive increase, 30% increase over pre-COVID levels. So the biggest question remains, what happens to growth rates from here? And I think the answer is we'll see lower growth in GDP, inflation, and earnings. And that does have a profound leadership in the markets. We're coming off high rates in everything. The S&P 500 operating margin is literally at an all-time high right now. So the path of least resistance is a lower growth environment, not a bad environment. It's going to be okay, but we just think it's going to be lower. And investors should focus on companies that can still exhibit secular growth narratives no matter what's going on.
So you're in the there's a couple of different ways you can position. Some people would say as we're moving into the kind of next phase of the recovery, that's when you want to own value instead of growth. But what you're saying is as we enter a slower growth phase, you want to own growth. I mean, the easiest way to do that is to own the RK type of companies, the FANGs, if you will. If you think those stories have played out, I see a lot of these names that are a little bit smaller, Pure Cycle, ANSS, New Fortress Energy. But is it those same characteristics that are attracting you? You think investors should be looking for the companies to have growth as it becomes scarcer?
Yeah, look, at the Federated Hermes Kaufman Funds, for over 30 years, we've been looking at companies that can grow regardless of what's going on. And let's take a look at Pure Cycle. The ticker is PCT. And all due respect to Dustin Hoffman in The Graduate, where he said plastics are the future, this is a company that is trying to literally change the world. It's fun to look at companies, and they may be small and they may be more risky, but it doesn't matter what's going on in inflation. Pure Cycle has a technology where I've seen them. I've gone out to their plant literally 2 hours outside of Cincinnati, where they take chopped up plastic trash from stadiums and they put it through their system, and out comes pure polypropylene. Less than 1% of the world's polypropylene is recycled. It's a huge problem. Our children's children are not going to be using they're not going to be using one-use plastics. And you take a look at this company and you say, they're taking a shot. Their process works. They have stuff from Procter & Gamble licenses where this technology can create virgin polypropylene. And that's a type of company that we want to bet on.
So let me make sure I'm understanding and what the implications of what you're saying are, Stephen. And what I think you're saying is growth in the markets, growth in the economy is likely not to be as fast as it's been here over the last year, let's say, or last 6 months in the case of the economy. And that implies a still growing stock market to me, but one that grows at a much slower rate. And that what we're maybe going through right now is a recalibration in recognition of that. Do I understand you correctly?
Absolutely. It's going to be a Goldilocks type market. It's going to be year 2 of a bull market where you historically see earnings slow sequentially year over year. We're going to have about 50% earnings growth in the S&P 500 this year. That's going to slow to more historical averages, 8 to 10% in 2022. And you're going to see a phased transition from these reopening stocks. Value stocks typically work, think about it, when everything is working, when rising tides are lifting all boats. When you have slower sequential growth, you still want those companies that can create their own offense, create their own shot, and grow regardless of what's going on. And those are typically growth stocks. And if you look at, let's just take inflation, for example. Take a look at Google Trends, the search term for inflation. That peaked in mid-May, just people searching for the word inflation. And that's at the same time where you've seen lumber, copper, corn stop going up every single day. And so inflation is transitory. This super high growth rate is transitory. It's called tougher comps. And in that environment, you want a secular story.
Shepard Smith here. Thanks for watching CNBC on YouTube.